I know the exact problem why you are not profitable yet, because you don't take one thing into consideration. You see a nice downtrend, you see the last swing low has been broken, so you pull out your fib, put it at the last high to the last low, you see the golden zone is at a smaller resistance, so you think this is a good trade for me to enter a short. You place your limit order here, stop loss goes above the last high, and you just aim for a quick 1 to 2. So let's see what would have happened to this trade. We would be filled here, but we get stopped immediately. So our order gets filled, but we don't see any bearish reaction from our area, and we're ending up getting stopped. Before I tell you what you're not considering in your trading, let me introduce myself. Hey guys, I'm Pascal. I'm one of the hosts here at Coin Compass and your expert when it comes to trading. I've been a trader myself for almost 5 years now, and I'm here to provide you with helpful insights so you can become a better trader yourself. The thing that you're not taking into consideration that your time frame is not the only thing that has market structure, because we are now on the 15-minute chart. We see a downtrend, but what are the higher time frames doing? And this is the exact thing that a lot of people, myself included in the beginning in trading, I did not do. I thought, I see a downtrend, I see a swing, this is a easy trade to enter for me. We see what happens, we get stopped often. Now let's zoom out a little bit and have a look at the bigger picture here. And what do you spot immediately if you look to the left side? This downtrend here is just a pullback on the higher time frame, because what do we have here? Up, down, and now we have a new down, which if we jump out to the daily time frame, we immediately see that our short here is wrong, because the current momentum is bullish, which is defined by a higher high, higher low, higher high, and now we expect market to make a higher low again and then continue to the upside, because here I can tell you again, take a look at the bigger picture. And what are we doing? If we take a look on the weekly chart, we are at a key area that has played a significant role in the past for bullish momentum. And if we pull it all the way to the left, see again, this is an area where there is a high probability that price will turn and shift the momentum from bearish, which we had here, into bullish momentum that could continue to the upside. Because you see, we bounced here, came up, then we bounced here, came up. So we know that there is a potential at this area that price will turn. So if we take this into consideration before entering a trade on a lower time frame, to check what are the higher time frames doing. And we see here as well, we bounced a resistance. So we would not look for shorts here, despite the 15-minute maybe looked bearish to you if you have seen this, but you need to have the bigger time frame into consideration. And if you see a chart like this and you're not certain where markets will go, wait, I can tell you wait, because if you come to a chart that looks like this and you have this bullish candle here, I guarantee you, and I hope that you do not take a short here, but instead look, the market structure here gives us everything we need to see. High, low, and we expect a new high here. So this is really the main reason why you and I were losing trades, because we were too focused on a lower time frame and we were not looking at the higher time frame. Despite we don't trade them, I do not enter the trade here in a long position. Let's say we go in here and I have my stop down here and I aim for this top. I want to trade the lower time frame because I don't want to wait for price to move in 6-7, because I'm more of a day trader. I want to open a position and close it at the same day. If you're, for example, a swing trader, you would have considered this trade. Then you wait longer for your entries, but it's easier to manage for you. So with this certainty, I can now go to a lower time frame and look for a reason to enter a long. And what have we seen here? We have started to form bullish momentum. So what would we do now? Instead of looking for shorts here on the left, we look for longs here. So we could, and I don't know what is now going to happen because I did not prepare the replay. I just choose some random point where it's good to explain. The market is going to pull back into our area of interest here in our Fibonacci. So we let the market play out and we might get filled, we might get not filled, but this is looking like we get filled. And what is price doing here now? We start to climb, and reach our take profit, which I have just chosen here at this last area where price was somehow consolidating, and we had some highs here and we had some highs also up here that we could take out. So these were my areas of interest, which I have chosen as a random take profit. I have not prepared this trade. So you see, just by reading the market structure, the higher time frame, you could have landed yourself a good trade by taking higher time frame into consideration into your trading, because lower time frame structure is just, let's say, a daily candle. If you see, let's say, a downtrend, but at some point we break to the upside here, our 1 hour candle will start to form something like this. And if you compare this with higher time frame, let's say, support areas where price is likely to turn, you will have a higher chance of winning, you will have more profitable trades, and you will be more conscious on your entries when you think, okay, let me take a look at the higher time frame first. Is my idea here on the lower time frame right, or is there a chance that I'm wrong? Because in trading it's all about probabilities. You need to think for yourself, how high is the chance this event happening that I am planning here? Let me just give you a simple example. If you have an area where price has resisted, and it's trading again up to this area, would you still consider taking a long here, or you wait for the price to break through and not just like this where you have a fake out? So a fake out is basically just something where price is faking that it will break out, bringing people into long, but it will reverse and the people will get stopped. So you wait for a clear breakout and then price retraces here. Here you could look for longs. This is an easy example of how you could take in probabilities into your trade. So when you enter a trade, always ask yourself, how high is the probability this happening, what I have drawn out, imagined, or whatever, how you have analyzed, and have you taken the higher time frame into consideration? This is really the most important thing that you need to change in your trading, and I had to do this by myself. I did not come to the charts and was perfect, and I'm not perfect now. I have made the realization that I need to take in higher time frame structure into my lower time frame trades, and this will lead to better results in the end. I hope you have now understood the importance of higher time frame structure on lower time frame price action. This is the one thing that will make you profitable if you put it into your trading. So let me know in the comments if you have thought about the importance of higher time frame in your lower time frame trading. If you've enjoyed this video and you could learn something, make sure to like this video, subscribe to our channel so you don't miss any of the upcoming videos from my co-hosts Quinton and Kate. See you in the next one. Bye bye.